the challenge with multi-sig when you get into a lending scenario is you now have, say, a lender, you have a borrower, you have a capital provider, you might even have a custodian, right? So you've got multiple entities that are now involved in this transaction, which makes multi-sig a little bit difficult, especially if the goal is to remain or to provide resilience and security over the Bitcoin. Because to your point, if the benefit for me using a 2 of 3 multi-sig with, say, Unchained or Theia as an example, is that I have 2 of the 3 keys or 3 of the 5 or whatever, right? I control the transactions, not somebody else. But as soon as you bring a third party interest who's now lending money to me and somebody has to secure the Bitcoin collateral in escrow or at a custody environment or whatever that is, all of a sudden I no longer have control. So what is the value of the multi-sig in that scenario other than you can see it, right? To your point. And so I do think that the multi-sig will continue to be in high demand for lending scenarios, right? Unchained Capital is a great example, right? They have their own multi-sig vaults that they've built. They also do lending. But I think if you look at, some of the LTVs and some of the rates where multi-sig is being used for security and for custody, right? They're very high. The LTVs are very low, and it's more rigid because managing a loan operation that's built around multi-sig is just it's got less flexibility. It's more rigid. It requires more, you know, uh, cooperation in real time with the key holders. It requires more security and governance around key management. Somebody leaves the company, you have to regenerate the keys, right? So there's just lots of different things you have to do to manage a multi-sig environment at scale. And that is why you see names like Fireblocks becoming so popular because of their MPC wallets, right? Multi-party computation, which is, you can think of it like a single sig, but it's sharded the individual key into however many parts you want, right? So the full key itself never actually exists anywhere for somebody to assemble and authorize any sort of transactions or movement of the Bitcoin itself. So it's an interesting scenario that continues to evolve, and I do think that as the banks get involved and as more regulated entities get involved, the custody best practices, the custody technology, and just how we use things like multi-sig and MPC and other things to secure the collateral and just be more transparent, provide more security to borrowers. I think those things are just going to continue to evolve in our favor, right? I think we are still early innings to where the companies like the one I work for and so many others are going to continue competing. We're going to keep building, adding more value, trying to get lower rates, trying to make things more efficient, more secure, more cost effective for borrowers. And that's just going to continue adding value for people like me, people like you. So I'm excited about what the future holds because I do think it will have some of the things like you're talking about, and honestly, a whole lot more.
It's interesting the higher maintenance of it, that the free market will basically thrive. So when we have less management with like not the multi-signature, they will be long term able to provide better rates and better and smaller fees. Basically, it's an interesting one. In general, I think. How early are we in this space? Because I feel like the banking sector is just slowly waking up to the idea that they actually should have the Bitcoin and should provide those services, like traditional banks, like your local banks, the community banks, the bigger banks in your country, wherever you are. I see now more like collaborations with Bitcoin exchanges and traditional banks that kind of try to provide something like that. At least in Austria, Germany, and that sphere, they're kind of getting started with that now. I would imagine in America, it's like a few years further advanced already than it is now here in Europe. What do you kind of see from the TradFi world, the banking world, coming into the space of saying, hey, we have liquidity and we would like for you to give us your Bitcoin?
But yeah. Yeah, it's exploded and it continues to explode because I think another way to think about that question is coming from the other side of the um the asset mix, right? What other assets are these institutions investing in, right? Real estate, right? Okay. Fixed income assets, bonds, sovereign debt. Well, okay. Commodities, okay. S&P stocks, Nasdaq stocks, right? That market's pretty heated. So I just think as an asset class, Bitcoin is really generating more interest everywhere, right? And I think so when you bring that into the TradFi space and capital markets and liquidity providers, the answer is absolutely yes, right? They are showing up and saying, hey, how can we get involved? How can we fund these types of loans? And, what does it look like for us to put our money to work in a way that is, risk averse, where, the if there's a default or if there's a liquidation, right, we're on the other side of that. And so I think as these capital allocators and banking institutions, financial institutions learn more about how it works, and they learn that there's really no borrower risk or credit risk because, well, it's an over collateralized loan, right? They give us more money in Bitcoin than we give them in dollars. So if they don't pay it back, well, then we can liquidate the collateral to pay off the loan, right? And so there's really no credit or borrower risk, which is vastly different if you look at like an auto loan or an unsecured credit card loan or a mortgage, right? You've got borrower risk, right? If the people don't repay you, well, then you have to go repossess the house, or you have to chase them down to pay back the credit card, or you have to repossess the car, right? And there's just a lot of additional overhead and work that comes along with that. So that's one thing that I think the capital markets are better understanding. The other thing is the asset risk. Sure, Bitcoin's volatile, but the technology that exists in the lending space is advanced enough to where, a loan that gets upside down on LTV, loan to value, well, the collateral will get liquidated before the loan is in the red, right? So there's really no asset risk for these lenders either. And so as they start to understand this, they realize, wow, okay, the rates in this Bitcoin backed lending space are, comfortably in the double digit range, kind of hovering around double digits, right? 8, 9, 10, 11, 12%. And they're seeing, well, okay, there's really no borrower risk there. There's no credit risk with these borrowers, and there's really no asset risk because of the automated technology that will preserve the value of the collateral that's backing my loan. So the only real risk vector there is the counterparty, right? The actual lender, which would be, say, would be us, the company that's doing the lending, or perhaps the custodian that is overseeing the security and safety and custody of the Bitcoin collateral throughout the loan term. But again, I think as more people within the capital markets are understanding these things, they're going, okay, wow, that's a better business model. There's more upside there. There's fewer risks, and it's a growing sector. So, short answer, absolutely. Like the capital markets are growing significantly, and as that continues to happen, companies like mine are going to get access to cheaper capital, which means we're going to be able to give people like you lower rates, more competitive rates, which will drive down the cost of borrowing against Bitcoin and just make people want to do it even more.
And Bitcoin, as you said, like it's kind of the perfect collateral. It's
Yeah.
if you compare it to like real estate, and it's kind of weird that real estate gets such better rates than Bitcoin, and there's no real reason for that. It's like real estate is a very risky asset compared to Bitcoin when you come to like how hard it is to kick someone out of a home, how hard it is to possess the home, like the all the lawyers and legal things that have to be involved in that. And then you also have a risk of the home itself. And then with Bitcoin, you can just like liquidate it like right now in this very second, and you can do it instantly, remotely. You don't need lawyers. Like you have a contract, you have control of it, just liquidate it, sell it, done. It's kind of weird because like real estate still gets so much better rates than Bitcoin. And I think that's just like a sign that we are super early and that the banking industry still hasn't really gotten it that Bitcoin is better. Like Bitcoin should get like a 2 times better rates than any real estate. And currently it's like the other way around, and not only 2x, like probably like 10x. I don't know what the rates are currently.
Absolutely. Yeah, and I mean, real estate has just been one of those asset classes that has, um, it has a certain risk profile in the eyes of traditional lenders, banks, financial institutions. And to your point, you can't really run off with your house, right? So the default risk and the risk of somebody just not paying on their mortgage is relatively low, especially for primary residencies. That's why if you want to buy your primary house, it's the only house that you have a mortgage on. You can qualify for things like FHA loans here in America, where the loan is actually backed by the government, and so the banks require less down payment, right? So you can buy a primary residence with, say, 3% down, as opposed to if you bought an investment property, like you have to put down 25%, right? Because the thought process there is the risk of me, somebody who's buying my dream home for my family, right? The risk of me leaving and not paying my mortgage is a lot lower because, well, that's more important to me. I'm emotionally connected to and invested in that property. But if you look at like an investment loan to buy property, you need to put down 25% because I'm not as emotionally connected to that. It's a business transaction. I'm probably insulated through an LLC. So if I stop paying, well, then it's gonna have to go through the LLC. But so I think back to your point though, yes, there's a lot more comfort and there's a lot more historic, precedent for growth and appreciation, which we know is due to inflation, for real estate, and therefore you do get better rates, you do get more competitive rates, and banks do have a sort of lower risk profile associated with real estate as opposed to Bitcoin, which is still, moderate. They view it as being more of a moderate to high risk asset class. It's more volatile, and that's why the rates are still higher. But I do think that as more players get involved who do have access to cheaper, um, debt vehicles to be able to raise capital more cheaply, right? Perhaps we even get to the point where eventually lenders who have access to central bank borrowing, right, and have access to the Fed window and things of that nature. I'm sure that's not too far off as well, at which point, the cost of capital for lenders is going to be more like, 3.5, 4, 5% as opposed to, 7, 8, 9, 10%.
Yeah, I'm really questioning like long term, like how long it will take the banking sector really gets that Bitcoin is the most pristine collateral, that Bitcoin is the one thing that they actually want to own. And I'm really looking forward to almost like a war between banks who can offer the best deal for Bitcoiners, to give them their Bitcoin, to give them cash for the Bitcoin. I think we haven't even seen the beginning of that. Like we were just like, I don't know if we if the target is on like a hill. I don't think if we even like started going up that hill yet. It's the there's only a few really good banks that are good banks that got it a little bit. There's in Germany one that really looks at Bitcoin, but it's mostly driven by like 1, 2 people there. And then there's in America a few ones that got it, but even those are. Bitcoin is usually a smaller project within the bank, and so this is the most interesting for me. When will they kind of get, oh, we want to have all those Bitcoiners? Because now there's exchanges like River, like Relay, like a lot of other exchanges that have the Bitcoin from the people. They provide the financial services. And at some point, they will look at all those big exchanges that are slowly getting bigger and bigger. And the banks will be like, They're kind of taking our space. Like they're kind of taking our share. Like, what the heck is
Yeah,
going on?
right. Yeah, I mean the future of lending and custody and trading and how Bitcoin interacts with and overlaps within the traditional banking space is very, very fascinating to me because you're right. I do think that once the regulatory guidelines and frameworks are more clear, once they figure out, okay, are we as a bank able to offer any asset protection, right? Because today banks can offer FDIC insurance on your deposits or my deposits at a U.S. financial institution, right? So if they go bankrupt or something happens, right, my cash is protected, at least in theory, right? And so I think there's still the question of how will that evolve and apply to, say, Bitcoin, which is viewed as a form of money, right? So if you, as a regulated financial institution, are able to manage my money for me in the form of Bitcoin, can you insure that for me as well through a similar mechanism, a similar protection service like FDIC insurance for my cash? So that's one question I'm eager to see how that evolves over time. But I think the other thing that you pointed out is that yes, as these risk and underwriting and profitability models are evolving, they're starting to look more at the future appreciation value of Bitcoin. They're looking at the growth and the CAGR as really their economic upside as opposed to strictly at the risk, right? Because most risk models are based on, well, what happens if the borrower does this, or if the market does this, or if the property does this, or whatever, as opposed to, well, okay, if Bitcoin does a 20% growth CAGR for the next 5 years, what does that look like for us if we're getting, say, 25% of that in exchange for, I don't know, offering um, some kind of yield on the Bitcoin that's being held with us, right? So there's just, I think, as these rules, as these best practices, as these risk and underwriting and profitability models within the banking space evolve, more innovators, more mavericks, more people that are kind of on that bleeding edge are going to show up and say, hey, we've now got a service that gives you 8% back for putting your Bitcoin here because of X, Y, and Z. And they'll have a risk model that tells them that that's what makes sense for their business, something kind of like what Strategy is already doing with their preferreds, right? With their stretch, their strike, their stride. They're offering much better returns, much better upside, much higher benefits to basically the same types of products that we've been able to buy through traditional equities, traditional S&P based equities and publicly traded companies for decades, right? So again, you've got kind of an example of that where because Bitcoin is powering the nucleus of those offerings and of that company, you're seeing higher upsides, you're seeing higher returns than the more traditional products that we've kind of seen and had our arms around for, the better part of 100 years. And so I think as the banks start to do the same thing, they're going to develop new risk and underwriting models. They're going to develop new profitability models that are based on the future value of the Bitcoin assets. And therefore, some of those benefits will start showing up in the everyday banking products and services that they offer.
The first thing that every Bitcoiner does, and the most important activity that every Bitcoiner keeps on doing, is buying Bitcoin. And I personally use Relay to buy and sometimes also spend or sell my Bitcoin. And there are two main reasons why I do so. The first one is it's Bitcoin only. They do not do any shit coins. They do not do any cryptos, any stocks, or anything else. This is a tool, an app that is fully focused only and solely on Bitcoin. The second one is self-custody. They give you the keys to your Bitcoin the moment you buy them. You never give them the control over your Bitcoin, and you don't have to trust them because you can verify that you and only you have the keys to your Bitcoin. There's no third-party risk. There's no freezing of your assets. There's no rug pulling. There's nothing of that. Download Relay, the app, on your phone or go to relay.app on your browser and use code Robin to save fees and get cheaper Bitcoin. I want to tell you about something very special to me. It's called micro seed. If you hold your Bitcoin in self-custody, and you should, you know how critical it is to secure your seed phrase. You should not have them on paper. You should not have them on anything else than titanium. With micro seed, you can engrave your 12 or 24 word seed phrase, the entire seed phrase, onto a 1-inch small washer. Yes, just one washer. All 24 words on that one washer. You can hide that thing everywhere. And even better, you don't need to buy a new kit every time you have to get a new wallet. You can make unlimited backups because MicroSeed is not selling the washer. MicroSeed is selling the device that stamps the washer. You get the full kit with the device, with the washers, with the hammer, with everything you need to get started today, and you can make with that unlimited amount of backups. Go now to microseed.io.